Hello everyone, welcome to the market opening bell for Wednesday 25th March, your 10-minute guide to the stock market. US President Trump has ordered the US military to postpone its planned strikes on Iranian power plants and energy infrastructure by 5 days. Israeli media, citing official sources, report that Washington has set 9th April as the target date for ending the war. Global stock markets rebounded and Hong Kong stocks rose. The Hang Seng Index opened 377 points higher, with the gain narrowing to 174 points at one stage. Later, reports emerged that a senior Iranian foreign ministry official said Iran had received a message from the United States through mediators and is now reviewing its content. This could mark the prelude to negotiations between the two warring countries. In the afternoon, the Hang Seng Index gains widened, closing at 25,063 points, up 681 points or 2.8%. The China Enterprises Index rose 191 points or 2.3% to close at 8,499 points, while the Hang Seng Tech Index climbed 118 points or 2.5% to 4,830 points. Total market turnover for the day reached 303 billion Hong Kong dollars. Southbound funds recorded a net outflow of 27.361 billion Hong Kong dollars from Hong Kong stocks. Among the flows, they net bought Tencent for 749 million, PopMart for 648 million, and Yangtze Optical Fiber and Cable for 485 million, while net selling the tracker fund for 13.07 billion, the Hang Seng China Enterprises Index ETF for 5.959 billion, the CSOP Hang Seng Tech Index ETF for 5.957 billion, CNO for 612 million, SMIC for 404 million, China Mobile for 299 million, and Alibaba for 155 million. Statistics show that southbound funds have net sold SMIC for 8 consecutive days, totaling $3.366 billion, and have net bought Tencent for 4 straight days, amounting to $2.853 billion. The three major A-share indexes moved differently in the morning, but all rose in the afternoon. The Shanghai Composite Index gained 68 points or 1.8% to close at 3,881 points. The Shenzhen Component Index rose 191 points or 1.4% to 13,536 points, and the Chinex Index advanced 16 points or 0.5% to 3,251 points. Combined turnover on the Shanghai and Shenzhen markets total 2,081.4 billion yuan. The onshore yuan central parity rate against the US dollar fell 98 pips to 6.8943. Alibaba rose 2.9% to close at $123.2 at the 226 Xuantie RISCV Ecosystem Conference held in Shanghai. Alibaba's DAMO Academy officially launched its next-generation flagship CPU, the Xuantie C950. The processor is built on a 5nm process, runs at 3.2 GHz, and for the first time breaks the 70-point single-core performance barrier. Its overall performance is more than 3 times that of the previous generation Xuantie C920, setting a new global record for RISC-V CPU performance. It's suitable for cloud computing, generative AI, high-end robotics, edge computing, and other fields, reaching industry-leading levels. In addition, the Xuantie C950 leverages the open source and customizable nature of RISC-V incorporates a self-developed AI acceleration engine and for the first time natively supports large models with hundreds of billions of parameters, such as Qwen 3 and DeepSeek V3, is expected to become a new high-rank CPU for the AI agent era. Unlike traditional closed-source architectures, RISC-V is open source, flexible, and customizable, and is widely regarded as an emerging architecture born for AI that may reshape the existing chip industry landscape. Xiaomi released its full year 2025 results with total revenue reaching 457.3 billion yuan, up 25% year-on-year. Adjusted net profit stood at 39.2 billion yuan, a 43.8% increase. For the first time, its innovative businesses in smart electric vehicles and AI turned profitable. In the fourth quarter of 2025, the company showed revenue growth but profit pressure. Yet overall performance beat market expectations. Revenue hit the record 116.9 billion yuan, up 7.3% year-on-year, marking the fifth consecutive quarter above 100 billion yuan. Fourth quarter adjusted net profit was 6.3 billion yuan, down 23.7%. No final dividend was declared. Xiaomi's CFO stated that the group remains committed to enhancing shareholder value and has been actively repurchasing shares in the open market. In 2025, Xiaomi repurchased 6.3 billion Hong Kong dollar worth of its own shares. In 2026, the company launched its first 2.5 billion Hong Kong dollar automatic share repurchase program, and since the start of the year, it has already repurchased $4.7 billion worth of stock. Turning to the WuXi Group's 2025 annual results, WuXi Biologics recorded full-year revenue of 21.79 billion yuan, up 16.7% from 2024. Net profit reached 4.908 billion yuan, up 46.3%. Adjusted net profit was 5.64 billion yuan, a 17.9% increase and beating estimates of 5.07 billion yuan. Gross profit rose 30.9% to 10 billion yuan, with gross margin improving by 5 percentage points to 46%. The group's total backlog at the end of last year grew to $23.7 billion, including $11.5 billion in outstanding service orders and $12.2 billion in potential milestone payments. The 3-year backlog also rose to $4.5 billion. Last year, the group added 209 integrated projects, bringing the total to 945 and strengthening its position as the preferred partner for global innovative biopharma companies and multinational biopharmaceutical firms. Clinical, late-stage and commercial manufacturing projects increased to 74 and 25 respectively. Through its Win the Molecule strategy, the group added 23 new external projects, further accelerating growth momentum. WuXi STA saw strong growth in both revenue and gross profit last year, up 46.7% and 72.5% respectively to 5.94 billion yuan and 2.14 billion yuan. Adjusted net profit attributable to owners rose 69.9% to 1.5587 billion yuan. WuXi EdTech posted 2025 operating revenue of 45.456 billion yuan, up 15.84% year-on-year. Regionally, U.S. market revenue reached 31.25 billion yuan, surging 34.3% and becoming the main growth driver. Net profit attributable to shareholders was 19.195 billion yuan, up 105.2%. Adjusted non-IFRS net profit attributable to parent company holders stood at 14.9565 billion yuan, a 41.3% increase in line with the earlier profit warning. The final dividend is 1.5793 yuan per share, compared with 0.98169 yuan the previous year. The company expects 2026 overall revenue to reach 51.3 to 53 billion yuan, with continuing operations growing 18 to 22% year-on-year. It emphasized that the outlook is based on existing orders and assumes stability in the global pharmaceutical industry, international trade environment, and regulatory conditions in key operating locations, though uncertainties remain. Laopu Gold surged 16.1% to close at $648.5. Its 225 sales performance was approximately 31.37 billion yuan, up about 220.3% year-on-year. Operating revenue was roughly 27.3 billion yuan, up 221%, and net profit reached 4.868 billion yuan, 2.3 times higher. It is understood that Laopu Gold's current inventory can generate 53 billion yuan in sales in 2026, almost double the 27.3 billion yuan recorded in 2025. 361 Degrees rose 8.4%. Yesterday's interim results show 2025 revenue of 11.146 billion yuan, up 10.64%. Gross margin held steady at 41.5%. Profit attributable to shareholders was 1.309 billion yuan, up 13.95%. Basic earnings per share were 63.3 cents, and a final dividend of 31.7 Hong Kong cents per share was declared, compared with 26.5 cents last year, maintaining a payout ratio of 45%. Together with the interim dividend of 20.4 Hong Kong cents, the full-year payout totals 52.1 cents. Haidilao released its full-year results for December last year, showing modest revenue growth but profit pressure, mainly due to a decline in table turnover at its core hotpot business. Revenue reached 43.225 billion yuan, up 1.1% year-on-year. Net profit was 4.05 billion yuan, down 14%, with earnings per share of 0.75 yuan. A final dividend of 38.4 Hong Kong cents per share was declared, versus 50.7 cents the previous year. As at 31st December 2025, the Haidilao brand operated 1,383 restaurants. In addition to the core brand, the group runs 20 other restaurant brands with a total of 207 outlets. Overall table turnover for self-operated Haidilao restaurants was 3.9 times per day in 2025, down from 4.1 times in 2024. The group served 383.9 million customers for the year, a 7.5% decline from the previous year. Non-Food Spring announced its 2025 annual results, rebounding strongly after the 2024 downturn and delivering record high performance, with its tea drink business leading the way. Revenue reached 52.553 billion yuan, up 22.5% year-on-year. The bottled water business resumed growth, generating 18.709 billion yuan, up 17.3%, though its share of total revenue fell from 37.2% to 35.6%. Tea drink revenue rose 29% to 21.596 billion yuan, lifting its share to 41.1%. Net profit was 15.868 billion yuan, up 30.9%, with earnings per share of 1.411 yuan. A final dividend of 99 cents was declared. Gross margin improved from 58.1% to 60.5%, mainly due to lower PET raw material prices and reduced packaging and sugar costs. Full-year selling and distribution expenses rose 6.8% to 9.8 billion yuan, accounting for 18.6% of revenue, down 2.8 percentage points. Mishe Group benefited from rapid global store expansion and stringent cost control, achieving historic double-digit growth in both revenue and profit for 2025. Last year's turnover reached 33.56 billion yuan, up 35.2%. Net profit was 5.887 billion yuan, up 32.7%, with earnings per share of 15.65 yuan. No dividend was declared. Technical analysis: the Hang Seng Index fell 44 points short of fully closing Monday's downside gap and was still 32 points away from reclaiming the 250-day moving average. Tuesday's rebound should therefore be viewed as a technical rebound only. Key support levels on any pullback are 24,790 and 24,550. The market is now pricing in that the Iran conflict may not end quickly. Crude oil prices rose again. NYMEX May WTI futures rebounded 4.8% to $92.35, while ICE May Brent futures climbed 4.6% to $104.49. US stocks retreated. The fear gauge VIX index rose 0.8 point or 3.1% to 27. The Nasdaq posted the largest decline, closing down 184 points or 0.8% at 21,761. The S&P 500 fell 24 points or 0.4% to 6,556. The Dow lost 84 points or 0.2% to 46,124. The Nasdaq Golden Dragon China Index, which tracks Chinese ADRs, dropped 29 points or 0.4% to close at 6,771. Software stocks came under pressure. Salesforce fell more than 6%. Most tech names declined. Microsoft dropped over 2% after reports that it is leasing OpenAI capacity, and Oracle has cancelled plans to lease a data center in Texas. Amazon fell 1.4% after its Bahrain services were again disrupted by the Iran conflict. Japan's second largest bank, Sumitomo Mitsui Financial Group, is reportedly planning to acquire Jefferies. Jefferies shares rose 2.5% against the broader market trend. Our stock pick today is Yadea, stock code 1585. Yadea primarily engages in the development, manufacturing, and sales of electric two-wheelers and related accessories. It's the world's largest electric two-wheeler manufacturer and maintains a continuously leading market share. Seeing the gradual recovery in demand for electric two-wheelers towards the end of 2024, the group implemented a series of strategic and operational measures aimed at strengthening its core business, consolidating its market position, and driving sustainable growth. These measures include prioritizing new product development, optimizing its domestic and international distribution networks, tightening cost control in production, and enhancing efficiency. The group continues to focus on long-term growth, investing steadily in R&D, especially in new product innovation and advanced technologies for core components, while stepping up promotion of the Yadea brand both domestically and across global markets. To capture rapidly changing consumer preferences, Yadea launched its modern series specifically designed for female riders. The series emphasizes retro and light luxury styling while offering 10 times the safety protection, and includes 3 electric bicycle models: Guangmang, Zhuiguang, and Ryan. In addition, the group introduced the Guanneng T35 model, inspired by robotics and targeted at young riders seeking stylish, fashionable designs and performance-oriented riding experiences. These products have become bestsellers and have contributed significantly to the group's overall sales growth and brand influence. The group will announce its results for the year ended 31st December 2025 on 30th March. It had already issued a positive profit alert in early January this year, expecting net profit for 2025 to be no less than 2.9 billion yuan, compared with 1.27 billion yuan for the same period in 2024. The anticipated increase in net profit is mainly attributable to higher electric two-wheeler sales and an optimized product mix, with policy subsidies for green mobility in Southeast Asia, such as Vietnam and Indonesia, and Europe. Yadea's overseas sales growth has become its core growth engine. Recommended buy-in price $12, target price $13.2, stop loss $11.4. I do not hold the above stock.